Troubles with the EV sector, troubles with quality control, low demand. All these things led to a pretty bad third quarter, so it's safe to say that Ford is in deep trouble. Dealer lots are overflowing, while key models are facing production delays. It looks like the management doesn't keep things under control anymore. Ford really messed up this time and shocked the car market. Let's have a closer look. What's happening at dealer lots? The Blue Oval is currently facing significant challenges in the automotive market, and while the recent earning reports clearly show the depth of these issues, with massive losses and stock prices taking a sharp dive, there's something else that caught our attention. Have you passed by a Ford dealership these days? Dealer lots are full, and it's not like EVs are the only ones that are piling up. The whole lineup apparently has big troubles with sales. You can see the sheer volume of vehicles on dealer lots, and it looks quite overwhelming. There are rows of various models, including Broncos and of course Mach-E's, even parked in areas that are not designated for vehicles. The situation looks quite critical, and it's easy to conclude that Ford has overproduction issues and that it simply can't move cars off its lots. Dealerships are running out of space while the company is accumulating inventory that can't sell. It's a mounting pressure that everyone is facing, and it's not just a logistical nightmare, but also a financial burden, which we will talk about in a few moments. Reasons for slower than expected demand are various, but it mostly comes down to pricing policy. The Bronco seems like a perfect example. That model used to be a sought-after vehicle, but today it piles up at dealer lots mostly because of its extremely high price. Bronco Raptors, for example, often come with a sticker price in six figures, which seems crazy even in these days of inflation. The situation is quite the same with other models, which all seem to be a bit overpriced. Add high interest rates to the equation and the conclusion is pretty clear. But in the case of some other models, it's not the price that keeps them stuck on dealer lots. All electric models like the Mach-E are unpopular despite the massive discounts, and we will get to that later in this video as well. But first, let's check what's going on with the F150 Lightning. Ford is paying dealers to order F150 Lightning. Believe it or not, Ford's EV sector is actually growing despite the massive losses that are estimated to reach $5 billion by the end of the year. The company marked record high EV sales in the third quarter with quite an impressive 45% year-over-year growth, which put the Blue Oval company in second place right behind Tesla. But things are still not going according to plan. Ford has made way too many of these electric trucks, and now it doesn't know how to sell them. So, the latest strategy is to offer incentives to dealers. Every time they restock their Lightning inventory, they get $1,000 per unit. A figure that goes up to $1,500 in the case that dealers order 9 or more units. And what's particularly interesting is that Ford has offered to pay retroactively to the first unit, so it turns out that the total sum is going up to $22,500. According to officials, the program is a win-win situation, as dealers can save space while still offering shoppers more flexibility in the model they choose. In any case, Ford is paying dealers to take vehicles, and usually, that's not a good sign. It's likely that Ford desperately needs to solve the oversupply issue and make room for the 2025 model year. From the buyer's perspective, this might be a good opportunity to actually buy a Lightning. The only problem is that not many buyers are actually interested in this all-electric truck, which turned out to be quite a disappointing performer and doesn't live up to the standard of its combustion versions. F150 production troubles. Too many things have gone bad this year for Ford. While some models struggle to attract more buyers and the EV sector loses big money, the backbone of the entire company, the super popular F150, has its own issues this year. The F-150 has been a cornerstone of Ford's lineup for years, but this year brought big troubles, as production was delayed due to a shortage of vital parts. With key components being unavailable due to significant disruptions in the supply chain, the truck's release timeline was pushed back, raising concerns about whether Ford would be able to maintain usual quality standards with limited resources. Ford addressed the crisis in a way that it applied modular production and flexible workforce deployment, but that didn't solve problems. Buyers are still facing longer wait times, and unlike with some other models, dealerships are facing lower stock levels in this case. Ford officials stated that the production has been stabilized, but many buyers are still waiting for their ordered models. Meanwhile, Ford is missing the huge profit that comes from its most popular model at a time when most of the lineup is struggling and the EV sector is making record high losses. EV sector and its troubles. The EV sector, commonly known as Ford Model E, continues with a big struggle. As mentioned, the company did record a big improvement in sales in the previous quarter, but all of that comes at a big cost. Ford is losing big money to keep up with rivals in the electric revolution. In the third quarter of this year alone, the EV sector has lost $1.2 billion, and the company expects to end this year with a total loss of over $5 billion. With all that in mind, it's no surprise that the management has decided to pause manufacturing of the F150 Lightning at the Rouge EV plant until next year. The company struggles to find a balance between supply and demand and finally overcome big problems with the electric pickup piling up on dealer lots. Furthermore, the company is still looking to find a balance in the EV sector between growth and profitability, which suggests that with the massive losses we just mentioned, financial sustainability still isn't on the horizon. With tremendous financial pressure coming from different sides of the sector, which also includes massive investments in domestic battery production, which would eventually reduce dependence on Chinese-made batteries, navigating the electric transition is only becoming more complicated. Let's not forget that the aforementioned sales boost comes as a result of massive discounts and that Ford is still losing big money on every EV it sells. So a simple ramp-up of production cannot solve the problem. In the meantime, new EV models have been put on hold, including the 3-row electric crossover planned for next year. Quality control still big concern. It's been a while since Farley stated that improving quality control and the quality of final products is a top priority, but we're not sure if there has been enough time to see the first results. The thing has been bothering Ford for years, and it becomes clear that it's going to take much more time to get back on track. For now, massive losses on warranty and recalls remain, with the third quarter of this year ending with spendings that go over $800 million. That massive loss surely played an important role in missed earning targets projected earlier this year. The initial estimations were 67 cents per share, but with these losses added to the account, the earnings are currently at 47 cents, which certainly has raised eyebrows among investors. Only in the last few months, the company stored 60,000 F-150 models for additional inspection, which, according to Farley, helped avoid 12 recalls. But it's still unclear when we're about to see these results from this additional effort in quality control. In the meantime, the third quarter was described as a disappointment. Revenue did go up, but the actual earnings are lower than expected. So, full-year forecasts now suggest below $10 billion in total earnings, and that, among other things, caused a recent stock fall of 9%. Problems are various, but it again mostly comes down to the EV sector and its massive losses. The combustion sector recorded $26 billion in revenue. The commercial sector contributed $15.7 billion, but at the same time, the Model E division reported a loss of $1.2 billion in the third quarter. Meanwhile, Ford is losing its ground in Europe, which is followed by layoffs that occurred recently. Ford plans to lay off 1,600 workers in Spain, but the whole European department is in a process of reorganization due to Ford's struggle to adapt to new circumstances on the market. Ambitious EV goals for Europe are there, but meeting the set goals doesn't seem all that likely, which indicates a pretty turbulent year for 2025. Ford plans to focus on quality, hoping it'll help turn around years of declining profits, but the EV business remains a big challenge, with profitability still far off. Losses are expected to continue. It is unclear how long the commercial sector can cover them. With the cost of EV production, rising expenses, and possible recalls, Ford's ability to stay financially strong is in question. Next year could be one of the toughest in the company's history. Thanks for watching, and see you next time.